Hello to all you interested investors out there. This is Don Crone, and this is my first video for my new YouTube channel, which I am calling Live Long and Profit. It's kind of a play on what Mr. Spock used to say on the original Star Trek when he was giving good wishes to people. I have a master's degree in finance, I'm a former stockbroker, and I have a passion for analysis. I'm also going to be publishing an ebook on Amazon soon on the subject of stock analysis. It's going to be called You Won't Be Young Forever: Stock Evaluation Skills for a Lifetime. It's mostly intended for college students and young professionals, but anyone who would want to learn something about stock analysis can learn something valuable from my book. I'm going to show you exactly what the cover is going to look like. That's the cover right there, as you can see. I also worked with a student of mine named Arjun Merchant. He provided me with some great ideas and graphics and layout. It's, as I said, it's mostly intended for college students. Now, each of my videos will use the same method to analyze stocks that I consider to be worthy of your attention. The book demonstrates my method of stock analysis, shows you the sites that I use, which data I consider to be the most important when deciding on whether or not to invest. So I'm going to demonstrate that same method for you today here. And the stock I'm going to be concentrating on is the Trade Desk, whose symbol is TTD. So the first thing we're going to do is talk about the business that Trade Desk is in. We'll look at their competition. We'll look at what happened with Trade Desk today, and then we'll look at recent activity, and then we will look at its fundamentals, including institutional ownership. So as you can see, the first site we're going to here today is MarketBeat, which I think is a very good site for information on stocks. And we're going to go to the profile section. And you can see here that says the Trade Desk operates as a technology platform in the United States and internationally. They operate as a self-service cloud-based platform that allows buyers to create, manage, and optimize data-driven digital advertising campaigns in various advertising formats. Now we take a look at the competition for Trade Desk. I did a quick Google search and found this site that lists 20 alternatives to the Trade Desk. I did a quick scan of the site, and the main pluses of the competition seem to be better support and ease of use. However, the main drawback of 18 of these 20 companies listed is slower to reach return on investment, which I would have to think would be a pretty serious concern and may outweigh some of the support and ease of use advantages. Now, the next site I like to use all the time is Yahoo Finance. If we go to the front page for TTD here, okay, you can see that today TTD was up $26. If we take a look at the one-year price chart, you can see TTD has had a strong run. I started watching it in August when it was in the 400s. I always use two indicators on my charts, the MACD and the shaft trend cycle. As you can see, the MACD is right here, and the shaft trend cycle is right there. You can see that when the stock peaked right in here around just a few days before Christmas, it was as high as $971, and it gave a clear sell signal on that day. And the shaft indicator now indicates that the stock is deeply oversold at this point. If we go back to the front page, you can see that the market cap of Trade Desk is about $37 billion, which isn't small, but is a lot smaller than a lot of the competition and many of the names that you hear discussed on the financial channels. You'll also notice that the average trading volume of Trade Desk is rather small too, under 1 million shares, which I normally consider 1 million shares to be the threshold for a stock I would consider, but given the performance of Trade Desk, I'm willing to make an exception. And you can see that today, even though it was up $26 a share, it only traded 784,000 shares today, okay? Now, if you look at their earnings per share, you can also clearly see that Trade Desk is making money at $2.92 a share. However, given its price, that means the price-earnings ratio of Trade Desk is a heart-stopping 275. I saw an article on Seeking Alpha recently that said that given this PE, that means Trade Desk is just a little bit too risky to take a position in now. And I guess if you're a value investor, this is probably where you stop watching this video. But if you like momentum plays, you can see on the price chart that TTD is just slightly below its 50-day moving average at this point in time. Now, that obviously can signal some possible further selling pressure. But as you see, with the shaft trend cycle being 0 and the MACD at 6, that's both deeply oversold. So I would think that there'd be more buying pressure than selling pressure at this point in time. Okay. As I said, I also have not seen any negative news on the stock recently. If you went to the NASDAQ site and punched in the symbol for the trade desk, you would see that there has been no negative news on the stock lately. So you would have to assume that the action in the stock at this point in time has been just simple profit taking. Now, another question you might want to ask it when you're looking at the stock is whether the recent action has anything to do with earnings. Now, you can see for Trade Desk, they do not report earnings again until February 4th. That is presently the projected date for earnings. You can see there's not a check mark in this box right here, so that means the date is not yet confirmed. The consensus right here is $1.36 per share, and there is no earnings whisper number filled in either. Now, it's about 3 weeks until they report earnings at this point in time. So I imagine the next 5 to 10 trading days, we will see a number filled in, and that the earnings whisper will tell us whether they think that Trade Desk is going to beat the earnings estimates or miss the earnings estimates, which will be a major determinant of their price action in the days surrounding their earnings report. Now, of course, if you think about the market in 2020, tech stocks and momentum stocks were heavily favored, and many of the best performing companies were part of the work from home play that the pandemic sort of forced upon us. But as the year was coming to a close, a rotation began, which means that investors are now reallocating money to stocks which they feel will outperform in 2021. In the past few months, the Russell 2000, which is a basket of smaller stocks, smaller cap stocks, has been the best performing index. That may signal trouble for high PE stocks like Trade Desk, but the recent action has not changed my mind, and the street still seems to like it. Now, if you went to, we have analyst ratings, and you can see that there has not been a significant amount of analyst activity in the stock in the past, say, 6 weeks or so. You can see the price targets range from about 730 to about 1,000, and 730 is just about the range that Trade Desk dipped down to before it turned back up. It's gained approximately $65 a share in the past 3 or 4 trading sessions. Now, the last 2 factors that should be concerned are earnings revisions and institutional ownership. Now, I mentioned Seeking Alpha a little while ago, and they are an excellent source for earnings revisions. If you take a look at this chart right here, you can see for the upcoming quarter, which will be reported on February 4th approximately, there have been 12 upward earnings revisions and 0 downward earnings revisions. That's a signal that analysts think the company is going to report a good, strong quarter. Now, if we go back to MarketBeat, we can get a picture of recent changes in institutional ownership. And you can see here that there are 2 companies that have taken major leaps in their ownership of Trade Desk in just the past week or so. One company increasing its ownership by 2,000%, and another company increasing its ownership by 73,000%. There was also a company in December that lowered its position by 45%, but it would seem to me that these 2 companies that are institutional owners and increasing their ownership by such a large percentage would also have to be seen as a vote of confidence in the stock. Finally, I want to make a note that I work with students teaching them investments, and we maintain a model portfolio, and TTD is one of the holdings in that portfolio. I also want to mention that I am available for a personal consultation through Zoom if you wish to enlist my services and have me teach you these stock evaluations personally. I hope that you like what you saw here. Please click on the subscribe button to become a member of my channel. Click on the bell if you want to get notified of recent postings. And please leave a comment if you wish. Thank you very much. Have a good day.